This is the basic premise. You have a strong stock, makes a big move. It doesn't matter if this is a 1 month move or a 3 month move or a 6 month move, doesn't matter the time frame, but it has to be in the top 1 or 2% of the strongest stocks in that time frame. And then what happens is they usually pull back, right? Pulls back, and then you have a moving average. This may be the 10-day, the simple 10 SMA, or the 20 SMA, or the 50. The best ones are the 10 and 20, okay? And then it gets tight. Then it starts getting tighter and tighter. Goes sideways, starts building higher lows, just surfing the moving average. Again, the moving average is usually the 10, 20, or sometimes the 50. I mostly do the 10 and 20, mostly the 20 ones. Okay, I'm gonna show you a couple, or actually several perfect examples, which I traded myself. And then they break out of this tight range. And the best ones are the ones that show relative strength, like the ones that can't break, that can't go lower, even if the markets overall, like the indices overall, are showing weakness and going lower. And these things just, they can't break lower, or they may even be building higher lows. So I'm gonna show you this Shopify. This is a perfect looking entry. It had a big move, okay? Went sideways for a couple of weeks, started building higher lows, built a tight range, and then it broke out. Okay, this is a 5-star setup. Another one, I didn't trade that particular one, but I did trade this one. So it kept going. So the first one, it bounced off the 10-day. Look at how it's surfing the 10-day. Okay, then it has a sharp pullback because it gets extended. Even the best stocks pull back eventually. Find support on the rising 20-day. Start surfing the 20-day. Actually, it stays it is below the 20-day, but it's building higher lows. Okay, has another range, gets really tight, and this is our entry, the opening range highs. And the opening range highs, it could be the highs of the first 1-minute candle, the first 5-minute candle, or the first 60-minute candle. And the first 60-minute candle is always actually a 30-minute candle, since there's 6.5 trading hours in a trading day. And look at this. This is a 5-star setup. Look at this. Look at what it did. Keeps surfing the 10-day, pulls back, surfs the 20-day for a while, pulls back again, finds support above the 50-day. Okay. Another example would be Tesla. Another one that we traded here. Perfect one. Has a big move. Finds support on the rising 10-day. Again, the strongest stocks find support on the rising 10-day, or if it's early in the move. And then it gets tighter and tighter, builds higher lows, starts surfing the 20-day moving average, and here is an early breakout, okay? We kind of anticipated the range break. It just looked so perfect. And then the next day it gapped up, and we added more on the opening range highs. Again, it's the first 1-minute, 5-minute, and or the 60-minute candle breakout. You can use either one of them. You usually want to get in as early as possible, so you want to use the 1 and 5, but sometimes the fail rate on the 1 and 5 minute candles are a bit higher than on the 60 minutes, so sometimes you may get stopped out and you have to rebuy higher. But usually you want to get in as early as possible when you have like a 5-star setup. And there's just a lot of them, like Fastly has a big move, keeps surfing the rising 10-day, builds higher lows, and then it kind of builds a little flag up here. Look at how tight it gets, and then it breaks out. And look at what it did. And you can use the 10-day. You can sell a third or half after the first 3 to 5 days. Just lock in some, move your stop to break even, and then you just use the 10-day moving average as your trailing stop. And once it closes, the first close below the 10-day, you sell it. So this here on this day, you would have gotten stopped out. This is what strong stocks do in strong markets. This is what momentum leaders do in momentum markets. And what is a momentum market? A momentum market is when the 10-day is rising and the 20-day is rising, and when a 10-day is above the 20-day. Okay, that's a momentum market. Like something like this. Okay, you don't have to catch any lows after the market bottoms, you just have to catch the meat in the middle. This is a momentum market, okay? I've had a huge run. I'm up over 200% in the past 4 months.